Good afternoon, gentlemen. I think we have waited for the 2 minutes as I suggested earlier. And welcome to all. Salam alaikum and Ramadan Kareem to all present here. As usual, I mean, we do not have a presentation as such because most of you must have already done the what do you call number crunching as well as a detailed analysis of the published disclosed accounts. So I will just briefly give you a outline of the 2024 performance of the company. The company had a very challenging year in 2024, where from the accounts you can see that our revenue has dropped by about 12% from about 20.85 million to about 18.285 million Real Omani. And consequently, the gross profit also came down from about 5.4 million to about 3.554 million Real Omani. And the net profit also has substantially come down to about 172,000 from almost 3.799 million last year. Last year, of course, we had a very substantial other income or the investment income of in excess of 3.3, almost 3 million Real Omani or 3.8 million Real Omani. So considering that, the operational profit also was down considerably this year from almost little over 1 million last year to about 100,000 this year. And the main reasons have been explained in our management report or the chairman's report, where just to highlight a few, the growing competition from the low-cost imports from India has impacted quite significantly on our has impacted our revenue significantly. And also the what do you call anti-dumping from has been imposed by EU and then USA and some of the other GCC countries, because of which the dumping is happening in the non-anti-dumping countries like Oman. Oman is one of the countries which is close by to India. So the low-cost tiles coming into the country has in fact increased, which is also what do you call one of the reasons for our lower revenues. And also the customs duty in KSA is still on. We have not been able to take it away, and also that is also has contributed to a significant drop in the what do you call the revenue there, and also the volumes there. And also the geopolitical disturbance in the region has disturbed quite a bit on the movement of the materials, especially into some parts of what do you call KSA via the sea route, the Red Sea route, and then Jordan and other things, which has also impacted. Jordan market has been totally cut off for us in the last year because of the geopolitical disturbance. So these are some of the reasons for which, because of which we had a downward performance. But having said that, coming to our balance sheet side, if you see, we have been able to manage our cash flows pretty well. We are still debt-free company, and then our what do you call our book value of the share is at about 135 paisa, which you would have already seen. And this is in spite of the inflationary pressures which we are having, because of all the reasons which I mentioned earlier. And also this is last year, in fact, we have been able to completely foreclose our term loan, which we had taken for our expansion a couple of years back. And also we had paid last year's dividend of about 4.4 million. In spite of that, we have managed our cash flow quite well. And then we continue to be a debt-free company now. Having said that, going forward, we see that we should be able to do a little better than what we have done in the last 3 quarters, because we feel that the last 3 quarters was one of the lowest ebbs in the last few years of our performance. Now I leave the floor to the room to have any queries or any questions, which I'll be too happy to clarify, and then we can take it forward from there. I would like to have this meeting a more interactive than one way where we just keep presenting and then, you know. So I leave the floor to the room now. Yeah. Yes, Mr. Sharur, please go ahead.
Thank you for the brief, Mr. Suresh.
Yeah.
So my question is regarding your operating level. On your operating level, as we saw this year, the company barely, managed to just remain positive on an operating level at a capacity utilization of 65%. Now, um, what I'm trying to ask is, what is the increase in capacity utilization that would, cause a corresponding increase in operating level? If you could give us a percentage or a high level number.
Okay, fine. See, in the current capacity of say what we are operating at say 65% is, or rather I would go back to previous year. We operated at about 65%, and then we made what do you call a profit of about a little over 100,000 even operationally. There, if you see that we have focused on our costs, and our efforts on cost reduction has resulted in a considerable significant what do you call benefit, and that was only for the part of the year, or I would say that that which benefit it will accrue on an annualized basis this year to the full extent. So considering that even at a 65% capacity utilization and at current realization levels, we should be able to marginally improve upon our bottom line. So we are above the break-even point as of time very comfortably, and any further increase in our capacity utilization and sale in the market will further improve our bottom line.
Would you be able to indicate, sir, what is the current capacity utilization?
We are in the same range of about 65 to 70%. The current utilization is in the same range of 65 to 70%. Okay.
Okay, so now my question circles back to the thing that I was alluding to earlier at 65 to 70% capacity utilization. These numbers we saw in the third and fourth quarter of last year as well. And if I'm looking at the numbers correctly, the company was not able to generate profit in an operating level at this utilization. So what changes now? Why is it so that during presumably this quarter or the next quarter at 65 to 70% capacity, you expect an operating profit, sir?
Yeah. Okay. Yeah. Sharur, to answer your question, one is when we said last year we operated at 65%, it was the average for the entire year. Okay, which means that it was marginally lower than that in the last couple of quarters. Whereas we have started this, this year, currently I'm saying is we are operating at 65% now. Okay, so which means it should be better than the last 2-3 quarters is what we anticipate. That is one. As I said earlier also, our costs, which we have been able to optimize over the entire year, was only averaged out in 2024, whereas the full benefit of that we will be able to appropriate in the current year. So with that in mind, we feel that our performance should be much, at least better than what we did in the last few quarters. Sharur, hope I have answered you. Your mic is off. Yeah.
Yes, sir. Yes, sir. I got it. I got it. Thank you.
Yeah. Yeah. Any other questions? Yeah. Richa, please go ahead. I think you have raised your.
Could you please give any insight on the KSA demand,
Sorry,
on the Saudi demand?
on the Saudi demand. Okay, fine. Coming to the Saudi demand as such, the overall demand there, the footfall also has come down significantly, because the Saudi government has taken up a view where they have already, couple of cities like Jeddah and their capital Riyadh has been, 40-50% has been demolished, and then they want to come up with a new skyline there. So they are in that process, because of which there is a temporary, what do you call, decrease in the demand. So once this activity of rebuilding starts, I think probably the demand should pick up. At that point of time, we should be able to participate in that demand. But having said that, there has been very huge capacity increases in the manufacturing units in Saudi, or which are also facing, to some extent, some issues in terms of utilizing their full capacity, is what we understand. So we need to wait and see how it is going to pan out once the reconstruction starts, which should happen in the next year or a couple of years.
And what about the custom duty?
Custom duty, still they are charging the customs duty on any imports coming into Saudi. And whereas we have now, what do you call, we know the trick as to how to get the refunds back, or rather the documentation required for it. And then we have been successful in the last 1 year to ensure that none of our customers have to forego the customs duty which they are paying. So to that extent, we have been proving that we are a GCC company with adequate value addition. Whatever is the conditions that they have imposed, we are ensuring that we are meeting that, and we are also documentary wise proving that, and then they are getting it back. But having said that, but it is still not what you call a free movement of trade between the countries. So this is still a issue which is a niggling issue, which we need to see how to overcome it. We have been in discussions with the ministries and with the government here to see how there can be a seamless flow of materials between the two countries.
Okay, thank you.
Good afternoon, Mr. Suresh. Thank you for the call. This is Abbas Maslemi from Vision Capital. Nice to hear your voice, sir.
Yeah.
Sorry,
good
I
afternoon,
apologize.
Abbas. Yes.
I joined the call a little late. I was on another MSX call. Today's insane. Today's like 4 calls in a day.
Oh, okay.
So, I may make you repeat something. I apologize for that. Something
Sure.
you must have already spoken about. Can you
No problem.
speak about the situation of the ceramic sector in Oman specifically, because it is your biggest market? And, one trend that we've seen for the last few years is obviously the imports from India. Are there
That's right.
any talks with the Ministry of, and now India and Oman are actually negotiating an FTA, so that might make your life a little more challenging, Are there any standards, that could, quality standards, I mean, quality checks, I don't know, are there any initiatives of such that are being discussed at the ministry level that could help you guys, to keep away subpar products coming in from India? That's my first question, sir.
Okay. Okay, fine. I think, Abbas, you hit the bullseye actually there. In fact, we have, all manufacturers together from Oman have made a representation to the ministry, and then it is in a very advanced stage of the government implementing the quality standards for the tiles coming in. The cheaper tiles and the low quality tiles coming in, they are in a very advanced stage, and then we expect that it should be implemented any time now. That is what we are given to understand. So once it comes in, that to some extent it will mitigate our issues here, where at least the low quality and very cheap tiles into the country will be restricted, and then there will be some uptick for the quality tiles which we are manufacturing. So there is a possibility that it should be implemented anytime soon. So that is what we are given to understand.
Could you give us some sort of data points on the Omani market? How many square meters is it? What percentage of that is being serviced by you and Almaha? How much are the imports from Spain, for example, at the high premium level? And how much is India? And I'm sure not all Indian quality is subpar, right? There's a lot of quality producers in India as well. So
That's right.
basically, I'm just trying to understand a little more market industry data, right? Because, I mean, let me
Yeah.
concede that Anwar Ceramic as a company has been lean, has been mean, and has been a fantastic operator, right? But at the end of the day, you are a price taker. It's a commodity in that sense. So
That's
that's the
right.
reason most of my discussion is actually focused on the industry and market dynamic, because there's really not much to comment anything at your level, because you've proven yourself time and again to be a very
That's right.
low cost, efficient operator. So,
That's
that's the
right.
reason I'm not focusing so much on your own operations.
Okay. Fine. So coming to the market, what do you call overall demand in Oman, we reckon that it is anywhere between about uh, 15 or 18 to about 25 million square meters, because it has been stagnant. It is not, I don't think so there has been any growth over the last couple of years. Whereas this year we foresee that there has to be a significant, at least a 10% growth in the market is what we foresee, because of the huge the Haitham city being what do you call already declared, and then there's a lot of developers are working on that, and also opening up of the what do you call the housing loans, basically, where about 50,000 housing loans is what we understand is being looked at now, and that also being dispersed through the commercial banks, and the subsidy of the government directly going to the bank, so that the general public are benefited out of that. So with all these things, we feel that there is going to be what do you call increase in there is going to be a demand increase for sure. And your other question was on how what is the market share of Al Anwar and Al Maha put together. See, out of this, I feel that we are anywhere between both put together, or at least Al Anwar should be in the range of about 40% market share. 35 to 40% of market share is what we reckon we are having. Al Maha numbers I wouldn't know, because I haven't seen what their local or the Oman volumes are. So to that extent, we continue to be the market leaders. And one more thing is that from India, what is coming in also is predominantly the so-called porcelain. So though some of them are not real porcelain, they are still vitrified between 0.5 to 3% water absorption kind of thing. But still, that is the major thing which is coming into the market here. Whereas the wall tile segment and then the thick tile segment and all still are predominantly with the local manufacturers. And with the quality standards coming in, we feel that we can further have our footprint increased in the local market with a little more volumes getting in here.
But are those porcelain tiles, I mean, supposed porcelain, like you said, are they competing with your ceramic tiles in terms of pricing? Because even if you come up with quality standards for ceramic tiles, there
Yeah.
could be a switch to porcelain if pricing wise they're as competitive as you, right? Because porcelain obviously is considered more premium. So how do you tackle that?
Yeah, see, when the standards is coming, it is not coming only for ceramics. It is coming for porcelain too. So when they have to bring in the porcelain, the real correct porcelain, then the cost is not going to be the same, the low cost which they are trying to get in now. There is a cost attached to a quality product even in the porcelain. So that gap is going to be certainly beneficial to us. When the quality porcelain has to come in, it is going to be substantially or if not substantially, at least at a decently higher price than what is coming in today.
Okay, clear, sir. And in terms
Yeah.
of Saudi, you spoke about the challenges. I mean, one is, of course, customs duty, even though getting refund is not business as usual, so it's not seamless. And
That's right.
you said there's the second thing you said is there's a lot of capacity that's come on in Saudi itself. Are
Yeah.
you looking at other markets? Because Saudi used to rely on Saudi as a pretty big export market for yourself. And not just
That's
for
right.
yourself, everyone else in the region as well. Are there any viable other markets where you can maintain margins? Because there's a freight component to it as well. So how close are you to finding viable alternate markets, sir?
Okay. I mean, it's a very fair point, because we also reckon that it's not, the Saudi is not going to be the same what it used to be for us a few years back. So we are also diversifying into a little other markets. For example, the MN market, we are consolidating quite well. And apart from that, with the anti-dumping being imposed in Qatar and Bahrain and all, there also we are now consolidating quite very well. And then we are looking at, we also participated in a very big exhibition in the Iraq market, and then which was promoted by the Ministry of Commerce here, and then we participated in that, and then that market also is looking promising. So we are already trying to make inroads there, and then probably we should, if we did the right things, then partially it can replace what we have lost out in Saudi Arabia.
Okay, thank you for that. And how are you seeing prices behave this year? Your realization prices on average for the year, and what sort of utilization levels are you seeing for your capacity for 2025?
2025, if the what we are looking at, the standards, the quality standards being implemented by Oman. So if that is going to kick in the next few weeks or in the next couple of months, then I think it should be a little better for us. Certainly, it will augur well for our volumes, where we can increase our capacity at least by about 10-15%, and also it can also give us a little more leverage in terms of the realizations also, where we will be able to appropriate that once that kicks in. Okay, but even if that doesn't kick in, like I said, we are looking at other markets more seriously, consolidating other markets, which is very visible. So with that also, we should be, even if our realizations are not going to substantially go up, but still we will be able to at least increase our capacities to a little higher level than what we are doing now. And apart from that, one thing before you ask me, I want to add is that we have also, what we introduced, a little large format tiles by the end of last year, is picking up quite well. We are getting good traction on that, and then probably that should also give us some benefit in terms of the realizations going forward.
Okay, so can we say that the worst is behind you in terms of both realization and utilization?
Yeah, for sure it is. In terms of utilization, it is behind us, and in terms of realization, it can be behind us if the quality standards comes in, and also when we are going to consolidate in terms of the other markets, probably we should be able to do better there.
Okay, but you're not just relying on the quality standards coming in, because in English there's a saying, right? There's many a slip between the cup and the lip.
That's
so
right.
Even if you think it might come soon, you never know, right? Because a similar conversation we were having with cement producers in Oman, and that never materialized, or at least that doesn't seem to be the case. So it's not the only thing you're pinning your hopes on, right?
No, absolutely not. It is not the only thing, because I was just only trying to underplay the other markets which we are exploring, and also the new sizes, the large formats which we have introduced, which is getting traction. So all those things are there for us to exploit, and then ensure that we are able to do better. And apart from that, before you joined in fact, I was also explaining about our rationalization of our costs, where we have done pretty well in terms of the rationalization, which we should be able to appropriate fully this year. Last year was an averaged out advantage which we had, whereas this year we should have that advantage. Whatever we have been able to benefit out of the rationalization will be we will be getting the full benefit throughout the year, right from day one.
Yeah, that may. But did you quantify the rationalization expense? How much was it total in terms of?
It is there. I think if you see my the numbers, I'm sure you will be able to look at it.
Okay, I can figure it out. Okay, it's fine. I'll do it.
Yeah.
Thank you, Mr. Suresh. All the best to you.
Yeah, thank you so much, Abbas. Yeah. Any other questions? Yeah, Richa?
So with this cost optimization, what sort of margin do you expect in this 2025?
I don't want to put a number to it. Okay, it's too early, because because it all depends on the volumes, it depends on the realizations. There are so many factors that goes along with that. I will not be able to put a number to it. Anyway, we will be disclosing every quarter our numbers, and then you will be seeing it for yourself.
Okay. Okay. Thank you.
Yeah. Any other questions? Any other clarifications required? Or maybe we will wait for a couple of minutes and then maybe we can conclude the meeting.
Good afternoon, Mr. Suresh.
Yeah, good afternoon. Who's this?
Thank
Yeah,
you,
Mr. Yaqub.
Yaqub. Yes, yeah. Thanks for the brief introduction and for your time today.
Yeah.
You have mentioned that this quarter would be much better than the last 3 quarters, but see, I didn't get what's your strategies for this year and the beyond this year.
Yeah, as I said, as I already explained earlier, this year we have now trying to consolidate on a few other markets. Okay, that is one. Like we are now consolidating on the MN market. We are getting foray a little more into the Iraq market, and also in the other GCC markets. We are looking pretty good there. Apart from that, also, as I said, on the cost front also we have done extremely well. So that also will contribute to the bottom line. Okay, so these are the areas where we are looking at and where we will be able to do well, and we are confident that it will be better than what we did in the last 3 quarters.
Brilliant. But may I know how much from exports, how much you are taking from Saudi Arabia, UAE, or Jordan? You have mentioned in this meeting as well, last year it was cut off. So would you expect to return this year, to come this year, I mean?
It all depends on the geopolitical. If the disturbances in the region, if the war is concluded early and then the peace returns to the region, then we can look at servicing those markets again. Okay, so that option is open for us always.
Okay. Apart from the anti-dumping measures that's in Oman, is there any new news about it?
Anti-dumping, we have been discussing with the government, but then we do not have a firm reply from them saying that yes, we will do it. It has always been that we will look at it, we will have to look at it and things like that. But then there is no firm reply as such. And like what Sharur, Mr. Abbas said, that there has been a talk between India and Oman on a free trade agreement and things like that. So with that in the background, I'm not sure how quickly or whether they will be able to implement anti-dumping as of now.
Would you think that would be last for years or within 2 months or within 2 weeks? Because last year I think it was applied, but it was applied for 2 weeks.
That's right.
Not last year, sorry, before 5 years.
Before last year, for 2 weeks they had applied. You are right. You are right.
Yes.
So we will not know. As I told you, with the what do you call the free trade agreement being negotiated between the two countries, whether it will be applied or even if it is applied, whether how they are going to apply, whether there is going to be a quota system, we have no idea on that. We'll have to wait for the government to reply on that.
The annual report noted some regulatory improvements in Saudi Arabia, and you have mentioned as well that there is improvements. But see, you have mentioned as well in the report, challenges remain. So, but I didn't get the challenges.
Sorry,
So you have mentioned that the challenges in the custom duties or the anti-dumping that's in Saudi Arabia, but there is improvements as I understand from the reports and from your discussions. But see, you mentioned as well in the report that's still challenges in that.
That is right. That is right. Because this is exactly what I had also mentioned a little earlier, where I had said that it is though there has been some improvement in terms of getting the refunds and things like that, but it is still not a seamless trade between the two countries. Still, every time you send it, there has to be a payment of 12%. You have to submit some papers. So it is not a seamless thing which as a GCC country we should be enjoying. So that is what we meant, that those challenges still continue.
Okay, thank you, Mr. Shirish. One last question. For the cost control and optimization, as you have mentioned earlier, it would be a good idea and a good start, but is that reflected to the raw material and supply chain, or just for the operations?
It is for the overall operations, in fact, including the fixed cost. And see, there are in terms of the input cost, in the raw material cost and things like that, there are inflationary pressures because of the situation in the region, where the sea freight has considerably gone up and things like that. So we have optimized more on the fixed cost side, where you will see the numbers. If you see the numbers, you will see that we have been fairly successful in optimizing our fixed costs. And then when we increase our capacities on that, it automatically it will get a better leverage over a higher volume.
Okay, thank you, Mr. Sharif.
Thank you.
Suresh. Thank you.
Thank you so much. I think Abbas, I think you raised your hand once again.
Yeah, just a couple of follow-up questions. A few years ago, we used to talk about dumping from China, and last couple of years, obviously, we're only talking about Indian market. So what happened in China? Where are those guys supplying to?
See, though, China has not been able to supply in the region because, again, the anti-dumping is still on the Chinese products. It is only on the Indian products that has been taken out. Added to that, the other main issue for the Chinese not to supply here is the very high sea freight costs still, which has not still come down. Whereas from the Indian sector, it has come down significantly, though it had gone up in between to a higher level. But again, it has started reducing. So these are the main reasons for the Chinese players not coming into the market. And added to that is China is now having a different strategy of establishing their own plants in different parts of the world itself. For example, in KSA they have come out with a large plant, and then in a few African countries also they are coming out with the plants. Instead of shipping it all the way from China, their strategy has been now a little more different.
Yeah, this was my second question, which you preempted. That I was wondering if there are any big ceramic manufacturers coming up in Saudi. I heard about the Chinese guys coming in there, but is that a trend that you're going to see more and more of? And would you see that out of India as well, or like Indians coming to the GCC and setting up plants, or you don't see that happening?
That is going to be difficult because they cannot replicate the cost effectiveness what they do there. Because when there is a cluster of 1,200, 1,400 companies in one cluster, the same advantages they cannot have when they have a one-off plant elsewhere. They will be in the same footing as what we are.
Clear, very clear. But okay, understood. And this Chinese anti-dumping duty is applied across all GCC countries?
Yes, that's what we understand. Yes.
Okay, and when you spoke about the Yemen market, are there any payment, like how do you work on, is it an LC? Do you take 100% advance payments? You have a direct, what's the model of supplying to Yemen?
In which market are you referring to?
Only Yemen, only Yemen.
Yemen, we are working on some credit because we are working with a dealer who has been with us for the last 25, 26 years. So we know, and then our people also visit there, and then we are we know, and with what limits we work with him and things like that.
Got it. Thank you. Thank you very much. Okay.
Thank you. Yaqub?
Sorry, Mr. Sharish, back again. But I have one question. Like, how would you compare this quarter one, to the previous year, quarter one, in terms of revenue?
We need to wait and see. We have not still completed the quarter, so I don't want to comment on this, which is not right till the quarter is over. Hope you appreciate that.
But would you think like it would be a higher? Or?
I will not be able to comment on that because that's not right. Because we have not still completed the quarter, so we need to wait for that to happen.
Okay.
Anyway, it's a matter of a few more weeks before we were going to give our initial numbers once the month is over.
I appreciate it. Thank you, Mr. Sharish.
Any other questions? Okay. If there are no more questions, I think we can conclude the meeting. Maybe we can give a minute more. Okay, so we assume that there are no more questions and queries regarding the performance for 2024. So thank you, gentlemen. Thank you very much for attending this and then posing your queries, and then hope I have answered all your queries to your satisfaction. Thank you very much, and then see you next time when we meet up again. Thank you.